And we're back here on the Power Hour, 33 minutes after the hour of 8 a.m. Central. Joins us. I always love talking to this guy because we never get enough time. To me, it's like I could spend 2 hours talking to Fred about stuff. This latest report out, Fred, before we get anywhere with the conversation, Harry Dent, do you know the name?
Sure.
The Dent method. He has said that 2024, we are going to suffer the worst financial shock in this country's history based on all of his studies and research. And I, at that point in time in the discussion, encouraged people that they might want to give you a phone call and talk about starting to get in line and all the useless junk they don't need, sell it and get stuff you do need. Especially you want to stock up on gold and silver. I don't know if you read that story by Harry Dent, but he's seriously saying we're never going to see this bubble again. But because of the fact that we're in like $27 trillion in the hole, that this whole thing is going to explode, and he's predicted next year it's going to happen. Have you heard anything like it, and what's your take on it?
Yeah, I've heard a lot of things like this. Unfortunately, there's a line of people that are kind of piling up here, taking this basic position, and I think it's problematic because as I've said before, unfortunately, a lot of what we deal with these days is based on the faith and the public's kind of conception for what they believe more than the fundamentals. There's an awful lot happening that's going to come up in 2024. We have an awful lot of debt situations that we have to deal with. We pushed back on debt problems this year. We passed that continued resolution in order to get past the government default. But, that came with costs, and it came with particular parameters. For example, they said that they would only actually allow this to go through and continue to fund government if there were reductions in spending. And that requires an agreement. And if they don't get that, we're back to where we stood. The debt is piling up so quickly that a lot of people are considering the possibility of what they call a debt bomb, where the interest payments start going up so much on the debt that becomes almost fundamentally impossible for the government to sell enough bonds to raise the revenue they need just to pay the interest, which requires them then to sell more government bonds to cover any shortfalls. And it begins a spiral, and it ends up, ending up with a complete implosion of the entire system. Now, I hope that the powers that be are smart enough not to let something like this happen. And I would certainly recommend for anybody who has that concern, don't wait till after it happens to start trying to adjust to put yourself in a position where you're protected. It's kind of like, calling a fire insurance agent after your home is in a blaze and asking him to provide you with some fire insurance. It's a little late at that point to start trying to protect your wealth. I would certainly, whether you buy the premise or not completely, not wait, but make sure that you have your fire protection, quote unquote, in the form of gold and silver way before any of these economic issues do surface.
See, those are the things that I look at and I've been talking to people about, and we're not trying to instill fear, but folks, come on, let's take a common sense approach to this. Leadership by example. You shall know them by their fruits. Now, we talked about this before. If your government is out setting this kind of example and they're spending money like a drunken sailor in a strip club, all of this stuff, it doesn't matter what the compromises are. We know it's all the politics is swirling like a toilet that's about to flush. And this is a big problem because people are looking at this and going, hey, they're doing it. What, me worry? Put on the Alfred E. Newman Mad Magazine face here. The bigger problem we have is that this leadership by example is driving consumer spending. And whether, I'm not sure, because people are, there's a lot of people that have dismissed this conversation we're having right here, Fred, as some sort of a Y2K joke.
Sure.
And I'm like, wait a minute, though. You're looking at all the warning signs of what happens when a bubble gets created and it's about to burst. And we're the prophets in this whole thing, looking at the economic system and the values and the algorithms and everything that leads up to these crashes like Harry Dent does. Puts all this stuff down on paper and says, look, here's the way it is, and I'm going to the media with it. You can call me a nutbag, but hey, when it happens, like you said with the fire insurance, don't come calling on me and crying on my shoulder. I warned you.
It's a little late in the game, So I hope that people are not following the example of the federal government as a way to live their life. I mean, my goodness, Most economists and most business people have said, as an accounting process, if you looked at the way the federal government operates, if you ran your private business that way, you would be in jail for fraud. There's no question they do things that within the corporate world will be deemed illegal. The manipulation of the way that they handle things is certainly not something that I think the public should be following as a lead for how to run their lives. That would be horrible as a way of doing that. I can't see anything worse than following that as your platform for your guideline for your life. Now, having said that, I also think that there's a difference between the idea of a conspiracy theory going off the rails and, people talking about the end of the world and trying to scare people, and the reality that we are dealing with things that are true and real. Whether you want to call it whatever you want to call it, we have fundamental issues that are certainly true, and no one's disputing them. And that's the funny part about this. No one's arguing the facts. The facts are the government is 33.7 trillion in debt. The fact is we are paying over $1 trillion in interest payments on the debt. The fact is the government is deficit spending at record levels every year, and the rate at which they're spending money is accelerating. So this problem, however people believe it will play out, is certainly getting far worse. And interestingly, in 2023, the public, for one of the first times since the 1980s, experienced this in real-term inflation that was so obvious, no one could ignore it. It became the fundamental question of why are prices going up at the supermarket week after week after week. We talked about my $25 bottle of olive oil. People are seeing this firsthand. I'm a little worried that in 2024, we're going to go back to this manipulation of the Federal Reserve using its balance sheet and the government using manipulating tools to hide what they're doing. It may not be as obvious to people, but people need to keep in mind that the U.S. economy runs on a paper system. And this paper system doesn't have backing to it. So it means the value that people have in their money is subject to really one thing: how much of this money exists. That's what determines its value, its power, as you and I experience it. So if they're going to inflate the crap out of money because they can't control their spending habits, then we're all going to be subject to this devaluation, whether or not you want to call it a conspiracy theory, whether or not you want to look at it as an end of the world problem or simply a fundamental issue that exists, things we have to deal with. It's just like protection on your home. You have that fire insurance, and it's not because you're out there anticipating that your house is going to be on fire when you come home from work today. It's just that when you have an asset that valuable, it requires some minimal protection. People do this. Your previous guest was talking about his self-preservation, protection with his weapon and his training. My God, he was an amazing guest, and his story is phenomenal. But it goes to the point of recognizing risk and assessing risk and determining what makes sense. All I'm saying to people is, look, however you perceive this risk coming up in 2024, I think minimal protection of some physical gold and silver coins has got to make sense to people. And I would certainly encourage people to do this early than late.
Well, see, the thing I was encouraging people on the show during the first hour is to get rid of the junk you don't need. Stop being a hoarder. Get rid of the junk you don't need and have a garage sale, do something. You can be under accumulation, but do it smart. Don't do. Like I said, in the first part of the show, Fred, I was telling people, look, I got a problem with the markets. I don't like playing the markets. The markets is like playing with ether. It's like crypto. And people think, oh, crypto is wonderful. It's like, no, it's not wonderful. It, like everything else, if it can be controlled and manipulated, like our currency is, this can't be good. Gold and silver, at least you have something physical in your hot little hand. And if you get rid of the junk you don't need, then you've got the money to be under accumulation and buy gold and silver so you have it in your possession. We talked about the underground economy in the last hour, the shadow economy, and what happens when the taxes go up, what happens when the regulation goes up. They've looked at this in Chile. They've looked at this in other countries where when they start doing this and the government starts responding this way, the shadow economy explodes and people go underground. This is what you're going to need, especially if there's a calamity.
I get it, and people get concerned because they begin to see that there's a fundamental flaw, but they really don't know what to do. There is a serious lack of education in the United States about how money works and how government functions. I get that. a lot of people just don't understand the fact that we have a central bank and it creates money and government can spend money it doesn't have, and how we print money and how that functions for the real world. This is something that is a little complicated. The mechanisms of the Federal Reserve, I've been looking at it for almost 40 years, and there's still stuff I learn every day. The manipulations of what goes on behind the scenes is phenomenal. And having a public having to try to understand this while they're trying to deal with their daily lives and everything being thrown at them every day, it is nearly impossible for people to grasp this. I would say the simplicity will boil down to just recognizing that basically when it comes down to value, the thing about gold and silver that is different from those cryptos is that lack of manipulation, the lack of the ability to just simply create more at will, especially if you're working with the U.S. coins I work with, they can't make more of them. The issues of these ended in 1933 when the gold coins stopped, and in 1964 was the end of the production of silver coins. That's it. The supply is already locked in time and fixed forever. Every future generation of Americans that will grow up beyond us for the next 50, 100, 200 years will never have more gold or silver coins in their existence than what now is available. So for those people that can stash it away, they should. There's also a tremendous amount of capital out there, beyond the idea that people maybe, like you said, sell off some of the nonsense that they have if they don't have capital. There is literally trillions of dollars that the Americans have put in the last year or two into things like mutual funds. And their rationale was, they're like you, they're concerned about the stock market. They don't like the idea that companies buy their own stock and use that cheap capital that the Fed made available and use that to borrow money to raise the value of their stock simply by purchasing volumes of their own stock on the open market, therefore making the stock price rise. Now, is that an accurate assessment of the growth of the company, or does that represent real value for anybody? No, it's manipulation. All you're doing is buying your own. It's like if you owned, half a dozen pieces of property on your own street, and you had the wealth to keep buying every piece of property that showed up for sale, and you continued to do that until there were no more properties, and then somebody gave you a whole pile of more money, and then you went after all the other properties that are not yet available, you could continually raise the value of their homes. Now, is that real? No, it's manipulation. And does this come to an end? It does. And that's what creates these bubbles. And when they burst, it's ugly. So I'm a little concerned, too, about how the market has thrived, because it's gotten away with it based upon this cheap money that the Fed made available, which, by the way, after we spoke last week, the Fed made its announcement. It is now curtailing its concept of raising rates. It's going basically into neutral and suggesting that the next move from the Fed, even though it may be 6 months from now, they're going to start lowering rates now. They're going to start reversing this process that they've instituted the past year. And this is, again, to try to help. We've moved the economy forward. We're fighting off inflation by raising rates. Now we think we may have tightened too much. We don't want to choke the economy. We want this quote unquote soft landing. So we're going to start lowering rates. But if they don't do this properly, that plane's going to come down. It's going to be kind of rocky. And I don't think we should expect the Fed to pull this magic trick off without any hiccups. I think 2024 is going to be a very interesting year.
Yeah, just in time for the election, they're going to lower interest rates so they can pat themselves on the back and say, see, look what we did. The whole thing is manipulated, folks. If you're a smart listener, you've been on this show a while, you know how we think. And that's a good thing we have Fred on here because, like I said, he's been in the rare U.S. gold and silver coin industry for over 39 years and operates uscoincapital.com. And we're having a logistical conversation here. This is not an infomercial. This is stuff you don't hear on infomercials, folks. We're talking about the reality of things. We're not sitting there trying to hype having gold and silver coin. Most of us who are smart out there understand why you need it. Fred established this. And of course, this being 'tis the season, we have some holiday specials out there that you are offering. If you could take a minute to explain what those are.
Sure. We always like to look for things that I think are what I would call holes in the market, little spots where things seem to be a little cheaper than they should be. Sometimes these things last for a week or two or a month. But anyway, I like to look for things that I think are undervalued, if you will. So we put together a couple of little specials for the holidays. One of them included one of the most popular things we did all year, which was a group of the Morgan silver dollars before 1921. So they're referred to as pre-21. The rationale for that is that in 1904, they stopped minting silver dollars and didn't make one until 21. So there were no coins minted between 1904 and 1921. So the 21 date itself of the Morgans is actually the most common of the entire series. Over 80 million coins were minted in that 1 year alone. So I went ahead and looked at the pre-21 Morgans and found groups of them in incredibly high grade, mint condition on a 1 to 70 scale. The higher the number, the better the quality. These are a 64 out of a possible perfect 70. By the way, a perfect 70 does not exist. I think the highest we've ever seen was a 67 or a 68. And as MS64s, 20 coins for $2,300, or about $115 a coin. It seemed to me a great opportunity for somebody to buy a quantity of silver, just a couple bucks out of pocket, and have flexibility. You could sell all 20 coins at once or one coin at a time. Then I looked into the gold market and found a couple of the groups of gold coins, particularly the $5 gold pieces that were minted with the Liberty head. And that was between the late 1860s and early 1900s. Up to 1907, we had a Liberty head design that was eventually changed to the Indians. But prior to that, prior to 1907, we have the Liberty head $5 gold pieces. These are also mint condition coins. And I put together just a pair of them, 2 coins, $1,450 for the pair. People have been calling me. They just love these. I've had people reorder 3 or 4 times when they got them. They found that they were either a great way for them to invest, or sometimes they even use them as gifts or help try to educate people about the idea of gold and silver coins. And then the third coin in the special was just a particularly high grade of the largest American gold coin minted, which was known as a $20 gold piece, struck between 1907 and 1933. I have to say now, when I say 07, I have to make sure I say 19, because this is 2023 now. So 1907 to 1933, the $20 gold pieces minted were known as a St. Gaudens, referencing the artist who had designed the coin. Those are available in Mint State 66, which is an unbelievably high quality coin, and they run around $4,100 a piece. You can package these any way. You can put them together. You can have multiples. You can do whatever you want to do. Anybody who has any questions, just give us a call at 800-878-COIN. I had somebody say I speak too quickly when it comes to the phone number. So 1-800-878-2646. And we can answer any questions you have, and we'll be glad to help people put together either groupings of these portfolios that we have for the specials, or assemble something specific for people based on their goals and needs.
Right, because a lot of people, this is the one thing, they like buying junk silver. They like dealing in small denominations, because they absolutely fear that we're going to be driven into an underground economic situation, that people are going to have the smallest common denominator in order to be able to survive. We get that. We get it, folks. The thing is, I want to talk about the volatility of gold and silver.
Sure.
Investing in this stuff is way less risk, isn't it?
Well, here we are now with gold at over $2,000 an ounce. We started this year at about 1,800 and change. So, we've had the typical kind of growth that we get, which tends to accelerate the more money the government prints, which is what has led me the last couple of years or so to kind of, be a lot more upbeat about my expectations of the future. I've always looked at this as wealth protection, and not to focus so much on the profits that people gain over the years, which does come with this, but I look at it as wealth protection. But the last couple of years, our concern has been growing, because again, I see the rate of the problems accelerating, and I think there's an interest there that is growing amongst the public to try to do something to provide themselves with some wealth protection. And I think this is the reason people even consider things like cryptos. Why is that even remotely popular? And it's because people are starting to think twice about the nature of the dollar and say, well, maybe I need an alternative. I'm just not comfortable with what I'm hearing. So there is some up and down volatility on a day-to-day basis in the price of gold and silver, because this is a worldwide market. So there is the price of gold and silver itself that trades all over the world. It goes from Europe into Asia and around to America. And as it trades, there's buying and selling, there's profit taking, there's conversations about how the mining operations are working. In other words, how much gold is being produced. There's conversations every day about the value of all the currencies around the world. Like, how's the euro doing? How is the Chinese currency doing? How's the Japanese yen looking against the US dollar? And they look at all these variables and they determine, okay, based upon everything, here's where the price of gold and silver should be today. And the market trades and it moves up and down. Now, if the dollar U.S. dollar begins to grow in value against foreign currencies. Again, I want to separate this from saying the dollar is getting domestically stronger, that you and I are getting more from it. We're not. But as the dollar strengthens against other world currencies, gold and silver will become cheaper in U.S. dollars. And if the dollar fades, gold will become more popular. So we have this inverse relationship. The stronger the dollar gets, the difference is going to show up in the price of gold. But this is in U.S. dollar terms. So if the dollar gets weaker against foreign currencies, it makes it more palatable and cheaper to buy gold. This is why you see gold prices move up and down all the time. And a lot of it is hard to kind of figure on a short-term basis. Again, as long as I've been doing this, the more you know, the harder it gets. So I try not to pay attention too much to short-term volatility. And I look out 3 to 5 years and say, okay, where are we? Where were we? So, in 1990, when we had $3 trillion worth of debt, we had $300 gold. And then by the year 2000, we had $5 trillion in debt and we had $400 gold. And then by 2010 and 2020, and here we are now in 2023 with $33 trillion in debt and $2,000 gold. Where do you think it's going to be, let's say 5 or 10 years from now, when there's $50 trillion in national bonded debt? What's that going to do to the price of gold? It naturally is going to have to climb higher. So it's going to be very beneficial for people to buy, give it or take any time of, any kind of short-term volatility that may occur.
See, that's one of the reasons why we're having this discussion, folks. You understand exactly what Fred said. In this country, right now, the current administration is going to continue with this runaway spending. They're going to do it. And so, here's the thing. You buy gold now, you buy silver now. And the thing is, if they go to CBDCs, God forbid, the price of this stuff, gold and silver we're talking about right here, are going to go through the roof because they're going to be in huge demand because everybody is going to want it. And when demand goes up, so does the price. Fred Dashevsky, thanks so much for being with us on the show today.
Great to be with you. Happy holiday season to everybody. Merry Christmas, Happy New Year. I hope it's a very profitable 2024.
Same to you, Fred. We appreciate that. USCoinCapital.com. Thank you. Merry Christmas to you too, sir. Thank you for all your support here at the Power Hour. We will be back tomorrow with our Thursday edition here. In the meantime, God bless you, and God bless the United States of America. Stay safe.
Amen.
See you tomorrow.